Welcome back. You're watching Market Fatafat on ET now, and let's continue talking about the stocks that are moving in trade. For now, on technical side, we have Ashish Kyal joining us on the show. Very good afternoon to you, Ashish. Thank you so much for joining us on ET now. And the first stock that you can talk about is NAM India. How is this one looking in the charts to you?
If you look at NAM India, we can see a very strong rise, and it has continued to outperform despite of rising sharply from the lows of 200. It has crossed that 340 mark also, and it's sustaining there. So despite of the broader market moving down, we can see this stock is outperforming, bucking the trend. So the overall view is positive, expecting it to reach towards the level of 390, and on the downside, one can maintain a stop loss of around 330 levels.
Okay, keep an eye out on those levels for NAM India. Moving on, we have Prestige Estate that's in focus as well. This one is also in focus on the back of its Q2 operational update. When you look at the sales, they have grown by 102% on a year-on-year basis, coming in at 792 crores, and also sequentially they are up by 81%. They've achieved the highest ever record sales in the first half of FY24, achieved a 69% of its FY24 guidance, that is of around 16,000 crores is the guidance that they're given. So yes, that is something interesting to watch out as well. Obviously, robust sales momentum is what we've seen continuing. Prestige Park Grove as well as Prestige Serenity Shores received overwhelming responses, what the company highlighted, and Mumbai contributes to perform well and continues to perform well, garnering formidable sales for the company. The collections are also up by 1% on a year-on-year basis. Management said that they're poised to continue to see growth throughout the rest of the year as well, and believe the best is yet to come for the company. So positive sales momentum, positive growth coming in from the company in Q2. Strong update at as of now, keeping the stock of us as well.
All right, let's shift focus. Let's talk about the stock that has actually managed to hit a fresh record high level in an otherwise weak market, and that's Kaynes Technology. If you look at the stock that actually hit a fresh record high level in today's trading session, at one point in time, Kaynes Technology actually rose approximately 16.3%, taking the stock price to 2,965.6 rupees per share. Now the stock has given up most of its morning gains, but the reason why the stock was perked up is because the company has entered into an agreement with the government of Telangana to invest about 2,800 crore rupees to set up an outsourced semiconductor assembly, testing as well as manufacturing facility in the state. So on back of that, we saw the stock actually gain for a third consecutive session, hit a fresh record high level, in fact soaring as much as 16% on an intraday basis.
Let's move on and talk about Tata Power then. And Ashish, when you look at it in the last 1 month, seems like a bit of a correction is coming in for Tata Power, a subduedness coming in there. What are the chart now indicating for Tata Power?
Yes, if you look at Tata Power, even today the stock opened gap down, and as the selling has continued during the day. So overall, short term, I think the stock is looking weak. The previous support for the stock is around that 242 mark. So over short term, we can expect it to move towards the 242 mark. And on the upside, I think the major hurdle is going to be around 258. So near term, the pressure can build up on Tata Power for 242 as the target.
All right, so that's the word coming in on Tata Power. Ankita, let's talk about Dabur India, and why is this particular stock in focus?
Cheryl, Dabur is in focus on the back of a note that Macquarie has come out with. They're maintaining a neutral on the counter with a target price of 590 rupees per share. Now they feel that the commentary for Q2, the pre-Q2 release is broadly in line, and they feel that the slight implied miss on the volume growth has been there, and it has been on the basis of the fact that the pre-Q2 update was offset by implied flattish operating margin, and they also feel that the year-on-year decline in the food segment sales in Q2 was driven by one-off factors, and on the back of that they're maintaining a neutral on the counter, and on the back of we are seeing a downtick of 0.7% coming in there.
Let's move on to stock number 21, and then Harsh, you're going to talk to us about Capri Global. What's the news for you?
Well, yes, so Capri Global, we've seen the gold loan AUM cross the 2,000 crore mark. That's quite a benchmark there for a business which started, just less than a year back. They've really, or rather just about a year back, they've really been able to ramp up with regard to the business for gold loans. And, currently we're looking at a gold loan AUM, as I did mention, 2,000 crore. And the branch network, which they're marketing gold loans through, has gone up to around 742, which is very close to that 750 target and guidance. They are planning to literally grow this book by 50% in just the next 6 months. So by the end of this financial year, FY24, they're expecting this number in terms of gold loans to go up to 3,000 crores. So keep your eye out. That's Capri Global, but of course in the decline today, largely in line with what the markets are doing.
All right, moving on. Ashish, let's talk about Angel One then. And on the charts, how does this particular firm look to you?
Angel One is positive. The volumes over past days have constantly picked up, and the stock has again working different. And it is touching the 52-week high. So I think one can create long position, use any dip as a buying opportunity. We can expect it to reach towards the target of around 2,150 on the upside. And on the downside, the support for the stock is around 1930 levels.
On and talk about the newly listed company, that is Jupiter Life and Lifeline Hospital. This one is in focus on the back of its Q1 numbers, because they recently listed, so they first report the Q1 numbers. When you look at the June quarter numbers that have come in, you look at the revenues from operation, 21% growth on a year-on-year basis. The EBITDA margins have seen a growth of actually EBITDA has seen a growth of around 7.5%, but the margins that have seen a decline of around 280 basis points on a year-on-year basis. EBITDA have come in at 21.8%. Profits of the company have seen a growth as well, 77% growth there, but gross margins of the company too are down. So some bit of a pressure that is coming in on the margins of the company. Maybe that's the reason we're seeing a bit of an impact coming in as of now on the stock as well. Jupiter Life Sciences down, Lifeline Hospital is down actually as much as 5% in trade.
All right, let's stay with the healthcare space then, and especially focus on the diagnostic space and Metropolis. Ashish, how is this one looking on the charts to you? Because given the fact that we've seen the diagnostic companies not go through a very smooth sailing. For the last 6 months, the stock has only gained about 15%, and it's been a very choppy 6 months for Metropolis, isn't it?
Yes, indeed, it was choppy, but right now, if you look at the chart, I think it's forming a cup and handle pattern, which is a bullish pattern, and looking like it's about to give a breakout. 1500 is the immediate hurdle where it is trading right now, and I think if it manages to cross that 1520, 1525 mark, we will have a strong breakout, giving the target on the upside at 1650. So the pattern target is 1650 for Metropolis, and on the downside, a very important support is at the 20 days average, which is near around 1450 level.
All right, let's shift focus on to paint companies, the tire companies, especially all of them who are dependent on crude as a raw material, all of them taking a knock in today's trading session, given the fact that you've seen a sharp spike coming in the WTI crude as well as Brent crude. In fact, Brent crude also went back to the $89 per barrel mark on back of the supply concerns, on back of what is happening with regards to West Asia. Also, you remember that on Friday, you also had Saudi Arabia say that they will go ahead with the production cut till the month of December. So on back of rising crude oil prices and the companies that actually use crude derivatives as a raw material are seeing a knock. So be it Asian Paints, which is at the lowest level since May, you have Berger Paints that's declining, as well as Kansai Nerolac and AkzoNobel, all of them saying taking a knock in today's trading session. And apart from that, you have tire makers. We did speak about JK Tyre as a separate company, a stock that was in focus on back of a news piece, but you have Seat as well as Apollo Tires, all of them actually dropping in today's trading session on back of the fact that they use crude derivatives as a raw material.
Let's move on to the next stock that is in focus on Gravita India. Ankita, this one is in focus on the back of a brokerage note, I believe.
Note that has come out by Antique, and they have initiated a buy on the counter with a target price of 1,250 rupees. And they feel that the market share is likely to improve to 16 to 18%, driven by regulatory tailwinds. And also they feel that the aggressive capex plans are likely to drive 31% of the volume CAGR over FY23, FY26 estimates. The margin stability achieved through commodity hedging is likely to be a little slow, and despite that, they are meant to buy on the counter. But given the markets, we are actually seeing a downtick of 4.5% on the counter right now.
All right, moving on, Ashish, let's talk about Macrotech developers then. On the charts, how does this realty play look to you? Because if you look at the last 6 months, 72% already uptick that this one has witnessed. You see some more insight?
Yes, if you look at macro tech, we can see some consolidation over past 2-3 weeks time. But overall, I think it's going to give a resumption on the upside. Usually, a continuation pattern is going on. So I'm optimistic about the stock reaching towards the level of 850, 860 on the upside as a target. And one can maintain a stop loss for the stock at 740. So most team looks like left in the stock. 860 is what we can expect over near term.
Keep an eye out on those levels over there. Let's move on, talk about IDFC First Bank, then Harsh. And why is this one in focus?
Well, it's in focus because IDFC First Bank was expected to do a QIP. 94.95 bucks a share was the QIP price which the board had recommended and determined. Of course, a 5% bandwidth always given, and what they've done is they've on Friday approved the allotment of 33 crore shares at 90.25. So they've exercised that bandwidth of a 5% discount. They've given that to the QIP interested investors, and they've raised around 3,000 crore rupees on the back of that. Of course, the stock tanking even below that because it's a bit of a negative. After the initial announcement of 94.95, they've issued at 90.25. That's a bit negative, of course, on IDFC First, and therefore the stock is down 1.7% in trade.
All right, that is IDFC First Bank for you. But here are Sanjeev Bhasin and his best bets in the banking space based on fundamentals.
And HDFC being a heavyweight is a key factor in pulling down the bank Nifty. I think a large part of the pessimism on HDFC Bank may be done with. If you see their monthly updates and the gross deposits stroke lending, then it's telling me that the credit demand is very, very robust. So I think HDFC Bank and Bank Nifty should be a key. And we think as the RBI governor was very bullish. He said the best place to be is in India. So I would take his words to be more credible than this present uncertainty which has been caused by this geopolitical event.
All right, on that note, we'll slip into a break on this edition of Market Fatafat. When we come back, some more stocks to discuss, so don't go anywhere. Welcome back. You're watching Market Fatafat right here on ET. Now let's continue talking about the stocks that are moving in trade, and let's put the focus on bus makers like Ashok Leyland as well as Tata Motors. Both of them are in focus in today's trading session. And why is that? Because you had the Road and Transport Minister Nitin Gadkari on the social media platform X actually write that the government has actually approved standards for the construction of bus bodies which will be uniformly applicable to both the OEMs and bus body builders as well. And this decision that has been taken by the government, this is due to the rise in the number of accidents. So on back of that, you've seen Ashok Leyland fall as much as 2.3% on an intraday basis. It's actually fallen for a fourth consecutive session. You had Tata Motors also that saw a sharp drop. You saw Force Motors, JBM Auto, all of them actually seeing a knock on back of this particular decision coming in from government. So watch out for all of them in focus.
Okay, let's move on and talk about HDFC Life then, Ashish. And what are the charts now indicating for HDFC Life? Where do you see it headed in the short term? What is the target? Last 6 months, you have managed to just see a 19% return. What is your expectation?
Yes, HDFC Life has actually not done much. And even today, if you look at it, the stock has been in a downtrend, not just today, but about 7-8 days trading session. And it has moved from around 660, 670 levels now towards the low of 618. So I think the short-term trend can be very sure. We can expect it to move towards the level of around 590 on the downside, which is a very important price action support. And on the upside, major hurdle for the stock is going to be at 40.
Okay, keeping an eye out on those levels over there for HDFC Life. But let's move on and talk about RBNL. We spoke about the railway stocks. Harsh did mention about them and the impact because of the political issues as of now, geopolitical issues as well. But RBNL is also in focus, because they have received an order also from the Maharashtra Metro Rail Corporation Limited, and this is around a 394 crore order, which is the cost of the order. So on the back of that, we are keeping an eye out on this one. But obviously today, given with the whole sentiment, we're seeing RBNL is also down and out in trade. Nothing exciting happening as of now. Trading at the day's lowest point because of the geopolitical tensions.
All right, moving on. Ashish, let's talk about Gujarat Pipavav and how is this one looking on the charts to you? Do you think that now it's an attractive time to look at this counter because it has actually consolidated, in fact, dipped lower also over the last one and a half month?
Actually, if you look at it, the stock formed a very important low around 121, showed sharp bounce back in the previous trading session, and even today the trend has continued on the upside. So I think the meaningful low is formed here, and we can expect it to reach towards the level of 140, which is the previous peak. So long positions can be created, risk reward looks good. 140 can be the target on the upside, and on the downside, I think one can maintain a stop loss around 122 level.
Okay, that's a buy coming in from Ashish on Gujarat Pipavav. 140 is what one could watch out for as well. But let's move on, and Harsh, Metropolis, why have you picked up on the fundamentals? What is the news flow here today?
Well, yes, you can see the stock is up and buzzing in trade on a tough day of trade, 1.5% higher, definitely meaningful. Metropolis came out with its Q2 numbers. Largely, it's an operational update that's come in from Metropolis, but a good indication as to the direction in which the company is really headed. You're seeing a 13% growth with regard to where top line is concerned, so that's a positive. You're also therefore seeing margins expand on the back of higher revenues, and the margin exact quantification has not really been given, but a margin expansion has been indicated sequentially, so that's a positive as well. B2C revenue has gone up by roughly 15% on a year-on-year basis. The premium wellness segment is the fastest growing segment in Q2 is what has been disclosed, and the gross debt currently stands at 44 crore. That's the operational update coming in from Metropolis. I think the first 2 points, which is where the core business as well as the margin guidance or the margin the actual margin performance is concerned, is the key positive, and that is evident from the stock price, which has risen up over 1.5% today.
All right, moving on, Ashish, let's talk about HUL and how is this counter placed on the charts? Do you see some scope of further uptick coming in? Because in the last 2-3 weeks or so, you've seen HUL trying to actually make a comeback, but will that be sustainable?
Yeah, indeed, because HUL has been trying to come back, it has been failing. But today, I think given the turmoil in the market, the defensive stocks usually start outperforming, and HUL has formed somewhere around double bottom near the zone of 2440, from where it bounced back few days back. And again today, after opening lower, it is trying to move up. So overall trend looks bullish for me on the HUL. I think the stock can be headed up towards the level of 2580 eventually. And on the downside, the important support is around 2470 level.
All right, moving on, let's talk about GOCL company on today. If you look at the stock actually, or Gulf Oil as we all know it, was actually buzzing on an intraday basis. Now it's given up the gains. At one point in time, the stock actually hit its highest levels to 2018 actually. The reason why the stock was in focus because the unit IDL explosives have bagged an order worth about 766 crore rupees from Coal India, and post this particular announcement, this particular stock saw a sharp uptick, but now given up all of the gains like the rest of the market is down 2% right now.
Okay, that's Gulf Oil, keeping an eye on that one as well. But Sunil Subramaniam, MD and CEO at Sundaram Mutual Fund, has actually changed his stance on the cement and pharma sector, and also the shares. Which shares is he viewing? Let's go across and listen into what he had to say.
We had actually gone underweight on cement a few months ago because more of valuation. But we went through a phase where we were underweight there, and we are back to being neutral to overweight on cement. So that's one big change in stance. The second stance, which is that we were heavily underweight in pharma, we moved that to neutral because we see a lot of selective stocks that we can buy there. The third is in terms of, for us in the new age IPOs, we are more into buying these IPOs a few months after listing because the IPOs tend to be a bit, price jacked up, if I may call it that way. So we wait for the things to settle, and a lot of the IPOs which came over the last 1 year, 2 years, we actually didn't participate so much, but we are now buying some of those stocks in an open market kind of a situation. So the digitalization and the formalization, the new age fintechs, I think those are the spaces where we feel that the Indian economic growth is going to be well represented, right? That apart, I think industrials and capital goods continues to be strong overweight for us. And for all the thing around banking, we feel that banking still has enough juice to be a safety plus kind of a sector. So we continue to be overweight on the banking sector.
All right, on that note, we are totally out of time on this edition of Market Fatafat. Thank you so much, Ashish, Samit, as well as Ankita and Harsh for joining us on the show and taking our viewers to all the stocks that are moving in trade. With that, it's a goodbye from Vinny, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.